Tan Sri Jamaluddin Ibrahim, who's of course, head honcho at Axiata, and he actually mentioned, which I found this quite funny, that he wants to hear wedding bells in the industry, which means that he thinks consolidation is really due for Malaysian telco industry. But why does he think it's so important?
He didn't exactly say wedding bells, but he does think there are too many players in the industry, not just in Malaysia, but also in Indonesia, and he did say perhaps Sri Lanka. So these three markets, basically, he thinks some sort of restructuring is due, because to him, there's just too many players, and in Indonesia, for instance, only the top player makes money. So for an industry like telco, where you still need a lot of investment in infrastructure, well, to Jamaluddin, you need enough profits to encourage companies to continue investing. He mentioned that Celcom, for instance, they invest $1 billion a year in capital expenditure, and revenue has been coming down for the entire industry since 2013. So what he says is they've been investing $1 billion a year every year for the past at least 4 or 5 years, and they're not getting any incremental revenue. So in that sense, of course, they're still making probably
billions.
more than billions. But they say it's justified because of the amount of capital expenditure that needs to go into the market for the profits.
I get that point, and that's what he actually throws out when he justifies, because you asked about the fact that they make really high margins, and he throws his weight behind it. He actually says, look, we have to invest. It is a capex heavy thing. How are we going to survive if the margins, are not that pumped up? Is that what he's saying?
Okay, I think it's also what the industry has been used to. The industry likes to throw numbers like EBITDA margins, because EBITDA margins, that's earnings before interest, tax, depreciation and amortization. So EBITDA is of course a lot bigger than profit after tax for companies like Axiata, also the telecom companies that have high capex, capital expenditure. So if you talk about, of course, things like depreciation, when they invest in infrastructure, there's a lot of depreciation. Of course, that's a non-cash item.
Correct.
But that needs to be taken out before EBITDA goes down to for you to get profit after tax. And there's also interest cost. So when they borrow to invest in infrastructure, there's interest cost, and that is taken out of EBITDA. But of course, when you talk about EBITDA margins, having 30-40% EBITDA margins looks very high when you compare to a lot of companies. But they say what his argument is, a lot of companies, they don't have the kind of cost structure they do. And when you invest $1 billion, you need to have a certain amount of comfort.
The other thing that he used, and I found this very, very, well, I won't say provocative, but it was an interesting way to put it, that with so much competition and, the consumers getting really good deals, he calls the industry sick.
Yes.
He says it's sick, and it needs to be either nurtured back, because if you look at what Gobin's been doing, he's been trying to bring down for everybody. So in cases like this, is Jamaluddin worried?
He didn't say exactly worried, and to be fair, the industry is still making enough money, or I would say the industry is still making money at this point. He says the industry isn't very bad, but the direction it's going is that from 2013, revenue for the entire industry, profits for the entire industry has come down. So in that sense, if you're not growing year after year, at some point, the industry needs something to be able to continue investing. I think that's basically what he's saying.
Okay, but in the case of like Axiata specifically, they've actually had their share price battered so badly by not just this whole thing about their numbers dropping or the Gobin and all of it. They've really, really kind of hit rock bottom. So the question is,
okay.
and the thing is it still a bargain then, with all of this stuff that he's saying?
Okay, I guess it always depends on whether you have a short-term perspective or how long-term are you. But what we can say is when we look at the target price for most analysts right now, the lowest target price, the only analyst with a sell call, the person's target price is 370. And
there's still some upside because it was like 320 or give or take.
225, yes. Last week, Axiata fell to as low as 325, and I think that was Tuesday. And on Wednesday, Thursday, and Friday, it picked up a little bit. So, and at that point, at last week, Axiata, which owns Celcom, is cheaper than Maxis and Digi. So that's something that investors might want to weigh when they look at Axiata.
They actually also have this time frame to give themselves, 2022, to build a unicorn. They're, aside from wedding bells, they're also looking for unicorns. They have things like Boost, Ada, and Appigate. Any of them have any potential to be one of those?
They would like to think so.
Okay.
Okay, I to be honest, there are a lot of, the competition is really great.
Yes.
You can have something that's really good now, but the problem is you have big players like Alibaba coming in and throwing in $1 billion here and $1 billion there. But that's it. It's not impossible. It could well be because you need to be a lot smarter, a lot more innovative, because you don't have the deep pockets. So they might just succeed.
For more on the stories, pick up a copy of The Edge Weekly at all good newsstands.